Welcome everybody. This is the Saturday morning Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right spot. First of all, we got to knock out our standard disclaimer, so let's go ahead and take care of that. All communications from Viper Trading Systems are for educational purposes only. Excuse me. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, with that out of the way, in the pre-webinar session, we had a discussion, and the team would like to see the following instruments: YM, crude oil, ES, and Spazzy Nazi. So, with that being said, we are going to go to screen 1 and start with crude oil. Here we go. All right. I see we have quite a few new people. We have some people on free trial visiting us and what have you. And so I'm just going to take a minute or two here and do a quick refresher. Hey, Marco, good morning. Good to see you. Welcome. Haven't missed anything. We're just getting started here. All right, so I am connected to a data feed to the broker. And through that data feed comes data for futures instruments. The primary instruments that we like to trade are as follows: crude oil, which is the chart you see here. We like gold. Both of these are $10 a tick on the August contract. We used to trade Spazzy NASDAQ in the room. We don't anymore. We also like the Russell. That's a great instrument. RTY, $5 a tick, September contract. And YM is the mini Dow, also September, $5 a tick. And we'll cover both of those today. And so what you see here is that if we did not have Viper indicators on this chart, you would just see a bunch of bars, and it'd be very difficult to trade. So what we created was, excuse me, background colors. You can see they're red, green, and intermediate colors. Bar colors, blue, yellow, and red. We have these predictors, which are swing levels printed out in real time. You can toggle those on and off. They're like an oval with a line in. They're basically support and resistance levels projected out into the future. We have the power meters, which are various trends in the market. And the most prominent thing, of course, on here is the bands. So we have the mid band here. The thick middle line is called the mid band. That features prominently in our trade taking. Most of you, of course, know what that is. And then we have 4 bands above it and 1, 2, 3, 4 bands below it. And that gives a lot of form and structure to our trading, which we're going to talk about quite a bit today. So the markets, all markets, this is crude oil futures. We like to trade that pretty heavily in the trading room. And just to orient you here, let me let you know kind of where we're at here. This is midnight on Friday. Friday was the 6th, right? Wednesday was the 4th. 4th of July holiday, which markets was a short day. And let's see, Thursday was the 5th, Friday was the 6th. I'm here in California, so it's Pacific time, of course. And you can see, looking at crude in these various sessions, most of you know, of course, that this session here is called the Asian session. Big banks and markets in Asia, Singapore, Hong Kong, what have you, are trading actively the futures overnight. Midnight, of course, is the beginning of the European session right here. So if you're a night owl, you can trade futures. They're 24/5, 5.5 actually, because it starts, all the futures instruments start trading at 3 o'clock Pacific on Sunday afternoon. And they trade pretty much continuously until the close of the market on Fridays. Excuse me. And you can see that in the early part of the European session here, just after midnight, that crude oil went into pretty much a big sell-off. So you have there's three directions that a market can go, and you want to know your market direction before you trade it. So why don't you type in what you think the three directions that markets can go? Let's do a quick pop quiz. What are the three directions that a market can go at any given time? We got to know what those are so we can trade them. I'm going to type in a box right here. So you help me fill in the box. What are the three directions markets can go? Here's my little text box. I got to put something in here. What's it going to say? We all know if you trade markets, anything, doesn't matter what you trade. This is universally true of all financial markets. Stocks, Forex, futures, doesn't matter. They all exhibit the same volatility. Good, good. Everybody got that. Let me see. Louis, Ven, Peter, Sally, Jim, correct. John, Kenneth, Ralph, good, good, good. Yeah, so markets can go up. Of course, that's referred to as an uptrend, which is a series of higher highs and higher lows. And in uptrends, we are taking predominantly long trades only, right? Long meaning we're buying. Markets can go down. That is said to be a downtrend, of course. And in downtrends, we are shorting the market. We are selling resistance. And then they can go sideways. Sideways is known as there's different terms for it. Range bound is one. Now in range bound markets, we can sometimes trade those both ways. So you can be in a sideways market, either long, short, or in some cases both, right? Trade both sides. All right. So before we look at actual trade setups, before we look at how we're going to take trades at or near the open of these various markets, let's do some exercises together. And we're going to look at various market conditions together. And we're going to classify them as up, down, or sideways. Now let's start with an easy one. Excuse me. That just tickled my throat this morning. I'm going to take a sip of tea. Stand by. There we go. Okay, good. All right. So here we were saying that in the European session on Friday morning, overnight here was a downtrend. So we can see that there was a downtrending channel. It looks something like this. You can visually see it. There are clues. You get a red background. Bars are predominantly red. You get a series of lower highs and lower lows as it trends down like such. Each move is subsequently lower than the next. The band, the mid band, and all the other bands are stair-stepping down like such. And these are all hallmarks of a downtrend. And so the way we trade it is, in any trend, we have this notion of thrust and retrace. So here's a thrust. Thrust is, when we use the term thrust, when defining price movement, it is the push in the trend direction. So if the trend is down, the push or thrust in the downtrend is down. Therefore, the retrace is up. So there's a retracement right there. I'm just going to do a couple of these. Here's another thrust to a fresh swing low. And there's another retracement right there like that. And you get the idea. You see it coming down. Thrust, retracement, et cetera, all the way down. Now, the way we trade that is that when markets retrace up to resistance levels and they roll over in a downtrend, we are selling or shorting the market. There's a short there. Here's another short right here. All the way down, right? Thrust, retracement, take profit, stop out, re-enter. Profit, stop out, re-enter, et cetera, et cetera, et cetera. Rinse, repeat. Now, let's look at, so we're all clear on that, right? Let's move on and look at some examples of an uptrend, and then we're going to do some drills together, and then we're going to step out, start looking at actual trade setups. Because armed with this knowledge, you will know what to do when faced with a market in the future that looks like what you're looking at. Hold on, let me clean this chart up. Give me 1 second, please. Drawing tools. Got kind of a mess from previous annotations that I got to get out of here. All right. Here's a definition of a sideways market. So what are the hallmarks of a sideways market? Well, I mean, looking at it after the fact is obviously much easier. And I get that comment all the time. Well, you know, Charles, you're always the armchair quarterback sitting there all comfy, nice on Saturday morning after the fact saying, oh, yeah, sure, that was a sideways market, whatever. How do you know in real time? How can you tell? How do you see it? How do we know it's a sideways market in the heat of the battle when it's happening? Anybody know how to do that? Here, let's do it together. This is the easiest thing. It's so easy. You're going to be blown away. Watch it. All right, hold on. Let me, oops. Ooh, I didn't even see it was paused. Let me come up here. All right, this is the sideways market on crude. But the question is, in real time, as it's happening, how do you know? I mean, like I said, we can see here that between after the bottoming out right here and over here. So how do you do it? How do you do it? Anybody have an idea? That's a question. How do you do it in real time? What do you do on the chart that helps you see it? We see it sideways now. Let's say we're going to trade this when it was happening. Okay, let's go back here. And here we can see that the market was selling off. This is how easy this is. That's right. Draw the lines, Kenneth Lewis. Everybody? Yeah. You draw the lines. Okay, it's literally this simple. This is all you have to do on your charts. You can do this yourself. You can practice this over the weekend. You take a horizontal line. Whenever there is a swing low established, in this case, you can clearly see there was a double bottom right around 58 here. See it? You pop a line in. Boom. Now, of course, you're coming off a downtrend. I ran out of data here, but this is on the 4th, of course. But, yeah, you were in a downtrend, clear double bottom. Boom. That's it. Put a line right there at support. Now, you let the market advance forward, and you're looking for a swing up to a resistance level. All right. Now, can you see that there's a swing established now at 74.09? You take your horizontal line and you pop a line right there. That's called resistance, right? That's resistance right up in here. Support and resistance. Now, before I put another bar on this chart, I'm going to draw an arrow that looks like this. And this is how we do it. We say that as long as the market remains within the confines of these lines, that it is said to be range bound. Right? As long as it remains within the confines of these lines, it is said to be range bound. Let's advance the chart. Okay, we come down, we check support, check support, check support, break it by just a couple of ticks, come back up, check resistance, resistance, dink around in the middle of the range at the mid-band. We went from, here's midnight on the 4th, we're going into the morning of the 4th. This is half an hour into the European session for you night owls, European traders. And here we are at 3 o'clock in the morning. So it's spent almost 3 hours doing this. Now, one thing you got to be careful of when you're defining a range is not to get head faked. Okay? Like that. Don't be misconstrued to think that this is now a breakout to the downside. It's not. When they challenge support and resistance levels, when they come in a range, when you're looking at a range, sometimes they come right to it. Sometimes they can't quite get there. Sometimes they poke through it a little bit. So when you're defining your support and resistance levels, you have to think of them as areas. Just simply support and resistance areas. And then if you're within the range, as long as you're staying pretty much kind of within the range, then you're said to be range bound. Okay? Now, is this range tradable? If you were up at this time, could you have traded it? Say you were going to trade the European session. You were a night out and you're awake and you want to trade, and you pop crude oil up and it starts looking like this. What's our definition of tradability of a range? Is this tradable? What do you think? What's our definition? Anybody know? Is it based on size? Is it based on the size of the range? Does that come into play? Okay, let's measure the range real quick and let's see what the size of the range is. Support down here by 60, just using round numbers. And I'm not going to go all the way up here. I'm going to say up, 96. Yeah, 36 ticks. 35 ticks. That's tradable. Our minimum is 20 to 25 ticks. Yeah. Now you have to remember that when you're trading a range, you trade the extremes, okay? So you're buying support or covering your shorts at the bottom, and you're shorting the top of the range. If you're going to trade both ways, you short the top, you cover, you buy support. You get long, you buy, you sell, you get out, you roll over and short it. Okay, good. Everybody got that right. Now let's go back here and look a little bit at where we can find definition of an uptrend, and then we're going to do a couple together. Or I'm sorry, yeah, you're gonna make some calls, because come Monday morning, guess what? Yeah, you're going to be looking at a chart. You're going to have to do the calls yourself. So it's good to practice. This is good practice. I'm telling everybody, this is good practice. Just take a chart and toggle back and forth. Am I in an uptrend? Am I in a downtrend? Am I going sideways? Here's an example of an uptrend right here. How do we know we're in an uptrend? What are the hallmarks of it? Well, here you went, let's start off to the left. Here we started off and we were sideways to up. In other words, the market was going up. And this happens too, that you can have sort of a mix where the markets are kind of going up but sideways. So here's a good example right here. Now, in the case of a range where you're sideways to up, you are not trading both sides. You are buying support on pullbacks. Here's a buy right here. Here's another buy right here. Here's another buy right here. When you're in an uptrend, it looks like a set of stairs going from the first floor of your house to the second floor of your house, and sometimes it forms a channel that might look something like that. Background is predominantly green. Bars are blue. Mid-band, all the bands stair stepping up. This is an uptrend by definition. This is an uptrend. Sideways to up, you're still buying support. Clear uptrend here on YM. Any questions on that? So what we've discussed so far is we looked at what a downtrend is, where you short resistance. We looked at a very large range on oil that was 35 ticks, tradable. We showed how to identify the range in real time with support and resistance lines. And now this is an uptrend where you're buying support on pullbacks. Here's another long trade right here. All right, now I'm gonna change this chart, and I'm going to show you several pictures of the market at any given point, and you're gonna type in what you think the market is doing, up, down, or sideways. I'm not going to lob any softballs at you either. I'm gonna mix it up a little bit here. Okay, we all should be pretty good at this by now, and when I show you charts, you should be able to instantly know what's going on. So let's start with this. You tell the team what you think is going on here on this chart. Up, down, or sideways? Or is there multiple conditions present here? That's possible too, right? Are there multiple conditions present? I mean, markets do V tops and V bottoms, right? They go from sideways to up, sideways to down. They can do whatever they want. Our clue is to figure out what they're doing. So on this chart, what is going on with YM? This is just after midnight on, what day was this? The 6th. Okay, so this is Friday morning. What was Weimer doing on Friday morning? Is there one predominant trend, or is there multiple things going on here? What say you, team? Time's almost up. I'll give you a couple more seconds. What's going on? How are you going to trade this? All right, a couple of you taking a shot at it. Good for you. Lewis typing in quite a few things. Good, good. Ven, like those answers. John, it's a good answer. I like that. Jim, Peter, Kenneth, Sally, I like it. Sally says sideways, it went down, and then it went up. Good. Good, good, good. So to the left-hand side of the chart, let's start with over here as our starting point on defining what the market is doing. Here's midnight Pacific here. So this is the European session, right? You can see here that if you put the support and resistance level in just after midnight, you had a pretty well-established resistance level, more or less right up in this area right here. Everybody see it? See resistance was held pretty much all overnight there, right? Here was your support area here. I define it more or less as this. Now I realize, of course, some of these pokes went through it a little bit. That's fine. You just find kind of a happy medium. This one didn't quite get there. This one went through it. This didn't get here, and this went through it a little bit. So support's really pretty much down in this area right here, right? Yeah, so this, if you said, well, in the beginning of this chart, as we showed it, you were sideways. You were coming to support, resistance, sideways, support, resistance here. Now, that changes around 2:30 my time when you hit this support area right here. You come up, you kiss the mid-band. Now, this is important. Notice how you did not get all the way back up to here. This is important. One of the things that really makes good traders is your observational skills. Your observational skills. What do I mean by that? Well, here's what I mean by that. The market leaves subtle breadcrumbs for you to consider as you're looking at the price action. So it's significant when you spent the whole night, 2.5 hours going sideways, and then the market did not do this. The background has turned red. You have a lower high and a lower low. You kiss the midband and you roll over. So this is a shorting opportunity right here. Now, if you missed that, I'm going to show these. In the future ones, I'm not going to show them. You're going to call them out. Here is your thrust. Here is your retracement. There's another chance to get in right there, like that. Kiss, boom, roll. That's a nice short trade. Now, most of you said sideways, down, then up. In fact, almost all of you said sideways, down, and then up, and that is absolutely correct. So this was the downtrending part where you're shorting the market on YM right here. We spiked down to a bottom around 224, 240-ish. We get a push back up through a swing. That's a higher high. We get a higher low as it sits on the midband twice. Now, just like this circle I said here, what is significant about this area right here? Think about it for a second. What is significant about that area right there? We just talked about it over here. What was significant about this circle, this swing that occurred here at the midband? What is significant about this? What are the breadcrumbs we got to think about when we're looking at markets? Yeah, it's a higher low. What's important to note is that twice, here and here, the market had an opportunity to go back down and check the bottom, but it didn't. What I'm saying is that if downtrend continuation was going to occur, it would happen like that. Yes? It would happen like that. So now you're looking to get long. This was actually a long trade right here. This is a V bottom. Couldn't go down, couldn't check this, couldn't break it. Now you're trading the long side. Long trade, long trade, long trade. Good. Excellent. I think everybody's getting it. All right, the next one you're going to do on your own. I think most of you are getting it. Let me pop some up, and I'm going to make them a little tougher. Because you know what? In the real world, they're not all easy like that, are they? They are not all easy like that. We're going to do a series of exercises where you're going to make the call. Up, down, or sideways. Okay, here's another shot of YM right here. We're going to do a series of quick exercises. I'm going to give you 5 seconds per screenshot. And you're going to type in U. I'm going to show it right now. Here it is. I'll get 5 seconds on the clock. U for up, D for down, S for sideways. You make the call. 4 seconds left. Type in a letter. We're going to do a series of these, and then we're going to step back and we're going to look at actual trade setups. Can't do trade setups till you know what the market condition is, right? You got to know it. You just got to look at a market and know it, and then you know what to do from there, right? 3 seconds. Up, down, or sideways. What is YM doing here? What is this market doing? That's all you're calling right now. U, D, or an S. Very simple. Type in a letter, make your call. Time's almost up. 2 seconds. All right, time's up. Sideways. Almost all of you got it. Some say sideways to up. And that's okay too, because it appears that over here, you can see with the green background, you were somewhat trending up, but you were still sideways. Okay, so you had resistance here. More or less resistance here. And you had support down in this area down here. Like that. And then you can see over here the market popped up very precipitously and started heading up. Now, in a market condition where you were sideways to up, this is the last part I'm going to ask you about this, is your primary mode of entry to buy support? That's buy, you would say buy. Sell resistance, so you're shorting it, or both. If a market condition is sideways to up, is your primary mode of entry buying support, taking profit, scalping at the top? That's the buy condition. Is your primary mode of entry short, so you're selling resistance up here? Come up and kiss, sell, short, 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 short. Or both. Are you doing both? Are you buying support, selling and shorting, buying support, selling and shorting, buying support, selling and shorting, all the way through here? How are you trading this range? You made the call. You said sideways to up. So the question is, how do you trade it? What are you going to do? Let me help you out with the size of it. The size is, 300 support-ish. And 339. So yeah, you're looking at 30, 35 ticks, plus or minus. 35 ticks. Yeah, I see a lot of both answers coming in, and I can see that. I see a lot of buys coming in. Now, no, you don't trade the midband. Let me be careful. Let me be clear about that. Let me address it first, and then I'll circle back. I want to be very clear about this. Okay. Generally speaking, if the market is sideways to up, in other words, you're going sideways in an uptrend, you would more or less want to buy support. So pullbacks into support, you're buying. That's your primary mode of entry. Now, this is a 30, 35 tick range. So, and it's pretty clean. In other words, the support and resistance is pretty well defined. You got to realize that if you're going to short resistance, it's in a sideways to uptrend, and you take a short, the last short would have been right here. Sometimes if a market flips on you in a sideways to up, and you don't scalp and tighten your stops on this roll for you both traders, so you could arguably, if you shorted that, you got a scalp and a roll, and you had to tighten your stops to break even. Then when this moonshot happened, it didn't stop you out for a blowout, right? Because that is the risk. In other words, in a sideways to uptrend, we are assuming that at some point the uptrend will continue. So if you're shorting the top, that is a risk. You can get popped for a stop at the very end of it if you're shorting the top, right? Does that make sense, everybody? You understand what I'm saying? So you got to be careful trading both sides on that, but this is very tradable both sides, definitely. Although the primary mode of entry should be buying, but that's all good. Now, last word about this. This is a case when you have a clearly defined range where you don't trade the midband. Okay? Generally speaking, unless it's huge. All right, if you have a range that's like 50 ticks and there's 20, 25 ticks between, say, the midband and the top of the range, and you see a box occur here and there's 20, 30 ticks to the top, yeah, okay, that's the exception. You can trade that. But generally speaking, we don't take midband trades in ranges. Okay, can you see this right here? See how it chops around the middle? Can't decide which way to go, and then it pushes the extreme, checks the top, pushes down here to the bottom, comes down to the bottom, etc. So there's no meat on the bone here. You're going to get head faked up and down if you're trading the midband in a range. No, 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 no. You don't do that. You trade the extremes of the range in a range. Midband trades are good for trend trading. Okay, everybody on board with that? That's right, Lewis. No midband trades in a range. Okay, that's the simplest way to say it. Generally speaking, there would be no midband trades in a range. Trade the extremes in the range. Okay, good practice. Now let's do something else. Let's see. Somebody wanted to see Spazzy Nazi. Let's get a Spazzy Nazi up here. And since we're all clear on what an uptrend, a downtrend, and a sideways range look like, let's start calling some trades. Let's look at NASDAQ at the open on Friday. It's 6:30 Pacific, my time. Yeah, I didn't put those up. Marco, that's an excellent call, and you are correct. Sometimes I toggle those predictors on and off, but the predictors in the case of a range are perfect because they tend to sit right around the support resistance levels, and what I like about that is the predictors help you see it. Yeah, because they're sitting right around where that support resistance helps you draw the lines, definitely. Hold on, Spazzy's loading. A lot of bars. Give it a minute. Come on, Spazzy. Locking me up here. She's being a spaz. She's being her usual spazzy self. Why do we call Nazi Spazzy? Anybody know? Anybody know why we call her that? Oh, there it is. Because she's uncontrollably shooting around all over the place with just these wild algorithms. You know, it's total spazaroo. Good for you. Well, sometimes not good for you. It's one of those things where, you know, if you're going to trade NASDAQ, and I'll show the chart in just a second here, you'll see what I'm talking about. You know, 1 minute you think you're going one direction, and I'll be darned, the next minute she's going the other one. Right in your face. Anyway, okay. All right, here's NASDAQ at the open. Right here. let me emphasize my point. This is the first minute of trading from the open on NASDAQ. 6:30 starts right there, and 6:31 isn't until right here, the end of 6:31. All these bars happened in 1 minute. 1 minute. How many bars are in this little box here? Like 50? Yeah, these bars are shotgunning at you. I mean, like, imagine a shotgun blast and you're running from it and it's trying to get you. That's spazzy sometimes. Now, truth be told, in the first 4 minutes, it's hard to trade Nazi because here you're off at 7:34. You're 4 minutes into the market open, and you could make the case. You could say, Charles, well, there was a short trade here. Well, sure, yeah, that is a short trade. I'll give you that. I will definitely give you that. How long were you in it? Well, let's take a look. Let me see if I can make my point. And don't think I'm not insulting Spazzy for you Spazzy traders. Don't take it that way. That's not what I'm saying. All right, so you got short at 633 and change. Came all the way down to the spike at the bottom. That's 633 and 14 seconds was the close of that bar out of that box. Okay, maybe you got that one. 633 and 10 seconds. Comes all the way down here, spikes down. There's 633 and this was 34 seconds between here and here. And depending on where your stop was, it comes back up here at 634 and 4 seconds. All this movement between what appears to be a good short on this box and the fact that it came back up here and spiked and took you out was less than a minute. Did you want to deal with that? Okay. Now, that changes over here. Now, look at what happens, and this was pretty fast. I mean, would you have had a chance to put a box here? Hard to say. In other words, would you have had an opportunity to catch this long somehow right here? I don't know. However, I'm going to pop quiz to make sure you're awake and you had your coffee. Is this a legitimate long entry on NASDAQ, yes or no? Type in a Y or an N, 5 seconds. Is that a legitimate long trade entry at 6:35, so you're 5 minutes into the market open on NASDAQ, yes or no? Simple question, a Y or an N. Does it meet our criteria for retracement? And don't worry if you're brand new or you're visiting or you're on a trial, because we'll explain it to you. Don't panic. Some of you are not going to know this, and that's okay, but we'll explain it to you. 2 seconds. Yes or no? Is that legit or not? Time's up. Yes, it is legitimate. Okay, so let's go back to our notion of thrust and retracement. Here was the thrust. We said you probably didn't catch this one. It was too fast. You probably didn't catch this one because you might be still thinking short and you might not have been able long, and that's perfectly acceptable. However, here we get a big, powerful thrust up. Background turns green. Bars are predominantly blue. Midband and all the bands are stair-stepping up. So this is the beginning of the uptrend, yes? This is the very beginning of it. It's like a new world being born, and it's up. Now, the minimum retracement that we can take for long entry is as follows. Can you see that we come back down here, and we pierce this thin line, which is called line 6? All right, so the bands are as follows. 1, 2, 3, 4, midband, 5, 6, 7, 8. 8 is the top outermost band. Now, you can notice that at the top of band 6, you have a thin line. That is said to be line 6. This thin green line, see it? Line 6, line 6. On the downside, on the flip side of that, the bottom line on line 2 is right here, this thin red line. Now, in order for there to be a legitimate retracement, there has to be a minimum pullback where there is a close below both line 6 and the stealth line, which is this sort of sneaky little green line right here. Now, so that being said, does this little cluster box of bars meet that criteria? Yes. Does it go below line 6 and close? Check mark, yes. Does it go below the green stealth line and close? Check mark, yes. This is acceptable. This is an acceptable long entry. It is the minimum amount of retracement that you can take in an uptrend to get long and take a trade. The minimum. Just to recap, for those who are new and visiting, when we consider taking a long trade on retracements, thrust retracement, get in long, right? It's healthy to think of the entry zone as a strike zone in a ball game where you are the batter and the home plate is right here. This is your shoulders and this is your knees down here. Small retracement, minimum, meets criteria, yes. Shallow, it's called a shallow retracement. Here's a mid-band retracement where the market can come down right around the mid-band. Say, here, we love mid-band trades. Everybody loves mid-band, good mid-band. And then we have what are called deep probes or deep retracements where it goes underneath the mid-band, and the bars can sometimes turn another color, like red. In an upturn, they can actually get red under there, but that's perfectly acceptable. It's called a deep probe or a deep retracement in an uptrend. Okay, next pop quiz, and then we're going to move on. Given what you know now about retracements, is this retracement a legitimate long entry, yes or no? Why or not? Right now we're at about 6:37 on Friday morning, trading NASDAQ. It was too fast at the open, shotgunning bars, but now we're about 7 minutes in. We're about 5, 6, 7 minutes into the market, and we see it's trending up. Are you buying support? Is that legit? Yes or no? This box right here. Does this meet our criteria for long entry on retracement? This box right here. Excuse me, 3 seconds left. Is that a good entry? 2 seconds left. Are you getting in now? Are you buying that? If you were yourself back on Friday morning and it was 6:38 and you're trading 6:37 is you're trading Spazzy, would you take that trade? Is that legit? Time's up. Yes, the answer is yes. It's legit. It pierces and closes below the stealth line. Check. Pierces and closes below line 6. Check. Forms a nice closed set of bars. Check. Double check. Your long entry be on the close of that bar right there, long. Good. Most of you got that. Everybody see it? Okay, let's do a different exercise. In this exercise, what we're going to do is I'm going to advance the NASDAQ chart. And when you think you see a trade, I'm going to make it this first one, I'm going to make it super, super simple. You don't even have to say what trade it is, long or short. You don't have to make a long or short call. You just type in the letter T. Okay? You type in the letter T. I'm going to start off with a couple easy ones, and then I'm going to make them a little tougher. Okay? All right. Here we go. I'm going to do this pretty fast. I'm going to advance the chart on NASDAQ, and we're going to pretend that we're looking at the market at 7:28, 7:30. So we're still within the first hour of trading on NASDAQ. And when you think you see a trade, like I said, you don't have to call it long or short. You just have to visually see it and type in the letter T. Ready? I see your questions, Vin. Kenneth, I'm not ignoring you, but we got a lot to cover. I've only got like a little over 10 minutes left. If we have any questions, let's sort of table them to the end if we can, okay? And then right before we wrap, I'll circle back and answer everything you're asking, okay? But let's keep moving forward with some exercises. It's really good to do that, okay? All right, here we go. Gonna advance the chart, and here we go. 7:38. Okay, remember you're typing in a T when you think a trade has set up. I'm going to keep going. Ready? All right, now we're at 7:42. Now I'm going to help you a little bit here. The trend is up, right? Pause for a second. Spiked up, background's green, stair stepping up. So we're looking for long trades on retracements, right? I'm just helping you out a little bit. There's 7:42. 7:43. I'm going to blow up the chart a little bit better so you can see it real good. Okay, 743. Okay, here we go. 744. Okay, let me blow it up just a little bit more. So big bar's just a little bigger. There we go. That's good. Okay. 745. Still on Friday morning here. Trading spazzy nazzy. All right, let me stop it right there. Okay, so let me follow through with this. Now, it was really interesting. Most of you got this, and that's most excellent, because you have to, this the purpose of this exercise is as follows. It's always easy to go back and look retrospectively at a chart and say, you know what, I see we were in a range. I see I should have bought there. I see that was an uptrend. I should have bought there, but I missed it. Why do I keep missing these trades? These trades come in real time, and I think I see them. They come and they go, and I miss it. In fact, what happened, just a feedback loop, some of you caught this first trade here and called a T right here, and that was perfect. Because, yes, that was the first pullback in the beginning stages of the uptrend, yes? Can you see how we pierce up here? This is the thrust move in an uptrend. Background turns green, bars are blue. And what is going on? This is the observational breadcrumbs we talked about. We can't just sort of sit back and say, well, that chart looks pretty cool. Oops, there was a trade. I missed it. What was going on with the bands right here in the mid-band with that thrust? All the hallmarks of a long trade are setting up right here, yes? And a big chunk of you caught this and said trade. Now, interestingly enough, after this thrust began, like this, a small handful you typed in, there was a trade and I missed it. And that is, I'm not going to call you out by name. I see you say you missed it because after you got to this point, you realized that this pullback met the criteria for entry. Remember we talked about observational skills, fine-tuning your observational skills. Did these bars close below line 6? Check mark, yes. Did they close below the stealth line? Check mark, yes. Are we in an uptrend? Yes. Is this a legit buy box? Double check, yes. And a chunk of you, kudos to you, those of you that saw it early. Now, the important takeaway also is this. There was a couple of you, not many, who typed in, I can't remember if it was here or here or here, typed in a T. Okay, now that was not correct. Okay, because in an uptrend, when a market is going up, what is the thrust direction? It's up, of course, yes. And so all this price movement right here, bars closing up, pausing, bars closing up, is headed all the way up, comes back, just kisses line 6 in stealth, not an entry, does not meet criteria, check mark no, check mark no. So you don't want to buy the thrust move, and this is one of the most important takeaways of today. I'm going to put it in caps. Do not, I want this to be sort of ingrained into your trading memory. Do not trade, what's the best way to say this? The thrust move. Under any condition. Whether it's long or short. Whether you're going long or short. In other words, in a downtrend, you never sell the thrust move down. Okay? This is not trade entry. And I know the psychology behind it. I know it because I live with it and it killed me for years. It's becoming convinced. Okay, maybe you missed that box. That's okay. But now you're starting to see the market move up. It's moving up. It's moving up. And you're like, dang. Man, I see it. Look, it took that swing out. Darn. I'm missing it. Well, okay, let's see what happens. Maybe it'll pull back a little bit. No, pull back. I can't get in there. Man, this thing's going to the moon. NASDAQ is taking off. It's taking off. It's taking off. And sure enough, look, it pulled back a little bit. Man, I better get in this thing. I better get in. I better get in. Pull the trigger. And you fire a market order up here somewhere. You're finally convinced this thing is going up and I better get on this puppy and ride it, man. I better get in here, and I get in. I fire a market order. I am convinced. Look at this move. Nazi is on fire. Well, now look what happens. You got in here, you got filled at the apex of the thrust, long at, whatever, 75 and a quarter. Your 12 tick initial stop is sitting down here somewhere. And you get a full stop, maybe on 2 contracts. But bingo, you get popped. Dang it! Every time I get in this stinking market, it knows I'm in there and it pulls against me. Why does that always keep happening? I keep stopping out. This is ridiculous. I hate futures trading. They always get me. Market's rigged. Well, now, wait a minute. Let's back up a second. What happens to this market right here? Now, a pat on the back for those of you, some of you typed in a T when you saw these bars forming right here, and that was correct. That was the trade entry long. That was the early retracement bounce. For those of you who pulled the trigger on a market order at the apex of the thrust, you're stopping out when the trade is setting up. So you're licking your wounds right here because you got popped, when in fact you shouldn't have gotten in here in the first place, and you should be buying down here where you're getting stopped out. Lesson learned, right? Some of you typed in a T for trade when these bars formed right here, and that was also correct. This is the retracement where you look to get long in an uptrend. Thrust, retracement. Here is the retracement, perfectly into the midband. These are midband trades. And it sat here for about 2.5, almost 3 minutes. That's forever in trading world land. Right? I mean, 3 minutes sitting there to put a box and get long and support, and we were probably still in the room calling it. Well, no, we didn't have Spazzy in the room, so you know, it wouldn't be a live thing. Hold on 1 second, please. Everybody see that? Let's do a couple more before we run out of time. Okay, what was the other instrument we wanted to see that we haven't seen? Does anybody want to see ES, or you want more NASDAQ trades? Take a quick vote. Any ES, show your hands. Quick, any ES traders? Do you want to see an ES chart, or you want me to keep going with NASDAQ? You want to see more moves on NASDAQ or ES? I've got 3 minutes left. Oh, wow, we got Russell coming in. All right, stand by. Tell you what, let's do a power thing real quick here. Let's do a Russell. Just power through a Russell, okay? Let's power through a Russell, and then we'll power through an ES. Dang those torpedoes, right? Let's power through it. No instrument left behind. All right. Hold on, I get the Russell up here. Let's get back to the open on Friday. See what that little spazzy thing did. Hey, you want to do the trade exercise again on Russell real quick? You like those? Where I advance the chart and you try to see if there's an entry? Yes? You like that? I mean, I think it's better than just looking at a static chart and saying it's an uptrend or downtrend. I mean, we're reconstructing real time to see if you can see the trade. Yes, yes, yes? Okay, cool. Okay, so here's the Russell. And I'm going to advance it from the open. And you are going to make the trade call. You collectively, team, here this morning. All right, 630 would have been located right on the chart right here. All right, there's your open on Russell RTY, $5 a tick, mid cap futures. Ready? Here we go. Now, when you see, no, that's not a T, John. Don't start typing in T's. I haven't started yet. Let me flush this out in real time. We'll do the first half an hour together, okay? You tell me when you see a trade signified by a T. You don't have to call direction. Here we go. Advancing the chart. There's 633. Now, just a word to note. Can you see that the first 2, 3, 4 minutes, 5 minutes, you only had this many bars form on Russell? Contrast that with Spazzy Nazi. Remember that snapshot? There's probably 200 bars in the first 5 minutes. Here you maybe had 20. See it? See how much more calm it is? Relaxed, not flying all over the place, spiking way up and down. Okay, good. All right, here we go. Now we're at 637, 639, 640, 641. Now we're at 646, 649. Remember, when you think you see price action that constitutes a trade entry, long or short, you type in the letter T. Here we go. We're still going. 650, 657, 7 o'clock. There's the first half an hour. There's 7, where are we at here? Let me go back to 7:05. Let me blow up the bars real big so it's all clear to everybody. There's 7:04 right there. You just completed the first half an hour of trading. 7:05. There's 7:06. Okay, we're a little bit over half an hour into the trading session. All right, I'm going to stop it right there. Most excellent. Now, I'm going to reconstruct this uptrend move so we can all clearly see that the trend is up. So on the Russell in the first half an hour, we were buying pullbacks. We're getting long, correct? Now, let's highlight some areas of this move. Here was the initial thrust. This is the beginning of the uptrend, yes? Some of you typed in a T right in this area when these bars formed right here. Now, going back and looking at it, was that correct? Going back now and looking at it, does it meet the criteria for minimum retracement entry in an uptrend to take the long? Yes or no? Looking back at it. I understand why some of you typed it in. I'm trying to address the area. So we're all on the same page here. Does it meet the criteria for minimum retracement in an uptrend? Yes or no? Looking at it now. No. Now, arguably, this bar, one bar right here, closed barely below stealth in line 6. Let's contrast this retracement with this retracement right here. How about this one? How about in here? How about in here? We're just finding support just under line 6 in stealth. Is that legit? And how is that different than here? Okay, good. Now, I'm going to put an X through this, but I'm going to put it in as a conditional X because it was a little late in the pullback. If you find a powerful uptrend and you buy this and it makes you money, you have to get in quick and you have to have an extremely tight stop in case it pulls back against you. So that's a conditional X. What I mean by that is this, just to be clear. It doesn't technically meet the retracement requirements in terms of depth, whereas clearly this one does. Stealth, close below, check, close 6, line 6, close below, check mark, double check, sits here for a couple of minutes, you're good to go, and that turned out to be a beautiful long trade. Excuse me, right here. Couple of contracts on that could have been one and done for you right there. You see that? Maybe you filled long somewhere around, 88.50, 88.60-ish on one of these bars long. Call it 88.50. And you stop out at 93 and change. What is that? It's 50 ticks. 2 contracts, that's a $500 move right there. Babanga. One trade, $500, and you were in the thing from 650, 649. You got out at 7:05, less than 15 minutes. $500, do lot. No heat whatsoever. You got in down here aggressively? Yeah, I gave you another maybe 10, 20 ticks. That's an aggressive entry. Now, some of you typed in the final trade on this chart was right here. Almost all of you got this one. When these bars started to form, here you typed in T's. So here's our thrust. We stop out of the trade up here, long. We get out. We get our retracement right down to just under the midband, right here. It pauses for about 06, and it broke up at 08, about a minute and a half, 2 minutes, sitting down here. We were in the room. We called this live. I took that trade. This is not here, 656. This is not acceptable. Okay, here, let me ask the team. Right here, is this acceptable? Does that meet the 2 criteria? What say you, team? Those 2 bars right there, is that acceptable? No. Checkmark stealth close? Yes. Checkmarks line 6? No. You have big cojones. No. We got to have rules, and we got to obey the rules in trading, right? We can't just chuck out, some market starts moving around. Well, I'm gonna throw the rules are out the window. I'm gonna do whatever I want today. The market's going up, pull back a little bit. I'm buying it. Darn those torpedoes. I'm going in. Well, I'll tell you what. Look, if the market has a strong uptrend and you're buying support and you pull and you get in, a lot of times you can get lucky, right? I mean, do you want to trade by luck or by skill? You want to just cast your lot and hope what happens, or you want to trade methodically with some rules? In the long run, the rule traders make the money. All right? Lewis, let's see here. The green line, green stealth, I understand. I thought green line and stealth cross to meet the criteria. No, there's no crossing involved there, Lewis. Okay? Let me clear this up. So everybody is, when you look at the markets, when you study the markets on your charts on the weekend, or you look at them Monday morning, or whenever you're looking at these charts, I want to be clear. There's no crossing involved here of anything. What has to happen is the bars have to close below line 6, which is the green line, and the stealth line. Can you see these bars right here closing below line 6 in the stealth? Can you see these bars doing the same thing? Stealth was right here. Line 6 is right here. The bars closed below it. Check the boxes. Legitimate trade. Did it do it here? No. Check mark yes on the stealth. Check mark no on the line 6. These bars here would have had to come down at a minimum to meet the criteria down into that area right there, and they didn't. No on the trade. In fact, this is just a trail stop check on the way up. Here's your legitimate retracement to just under the midband, and you get long. All right, we're really running over here. I'm going to stop the recording. Tell you what, you ES traders, my apologies. We will get to that